Well, for more on the markets, I'm now joined by Ross Gerber of Gerber Kawasaki. Ross, hi, thanks for joining us. A predictable jump then in CPI on the back of those higher oil prices. But should investors be worried this will push the Fed higher in November?
Well, no, actually, because oil prices are just being manipulated by Saudi Arabia higher. And what we're looking at on the core is that actually prices were going down as the trend continues for lower inflation over time. So right now we're seeing some jump in inflation from the very steep downward decline as the economy in the United States has actually held up pretty good. But in general, the main driver of inflation has still been shelter and wages, and that's really what the Fed's watching the closest is unemployment and wages, and that continues to moderate. So we think the Fed is done with the interest rate cycle, and we'll get confirmation of that with the Fed meeting. And now we're really looking at what will be all the effects of these interest rate changes on, let's say, corporate credit or commercial real estate or the banking system as these ripples still continue to go through the economy and will for many more years. So I think this is good news.
Do you think, though, that investors should be worried about those higher oil prices taking a bite out of consumer spending power?
Absolutely not, because you can buy an EV. Only clueless people are driving ICE vehicles today because you can buy an EV that is at the cheapest price I've ever seen anywhere in the world, whether it be Europe and Asia or in the United States. And in California, EV sales are now almost 25% of all car sales. So there's no reason to be paying for gas. There's no reason to be funding Saudi Arabia and Russia. And investors and consumers have choices that strip oil out of the entire equation of their life. Why would you not do that?
Well, the big automakers in Detroit are fairly slow compared to other companies to adapt to that switch to EV. But how hard could that switch and indeed the whole industry be hit by a potential strike?
Right. And this is the sort of underpinning of what is causing the labor strife in the auto industry as this transition involves different types of workers and less need for total overall workers. And the UAW knows this and they're pushing for concessions. Meanwhile, Ford and GM and Stellantis and the other car makers have made record profits on their gas cars recently. And so there's a lot of money to go around, and the unions want some of that going to workers, and maybe rightfully so. But I think in the end, this is a major transition in the auto industry, and these companies are still very big and bloated. So, a strike would be very detrimental actually to the goals of the car companies and the unions in getting what they want. So I hope that they work something out because I find in general strikes to be extremely detrimental to both parties, as we've seen in Hollywood with the actors and writers strike, which is just, sort of devastating the entertainment industry now.
Ross Gerber of Gerber Kawasaki, thank you so much for joining us.